Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Digi International Inc. quarterly report. Digi International Inc. offers a wide range of business and mission-critical Internet of Things, IoT, connectivity products, services, and solutions to various industries worldwide. The company operates through two main segments: IoT products and services, and IoT solutions. Under the IoT products and services segment, Digi provides cellular routers for secure wireless connectivity, cellular modules for embedding cellular communications into products, console servers for remote access to network equipment, and radio frequency products under the Digi XB brand. The company also offers embedded system products under the Digi Connect and Connect Core brands, as well as infrastructure management products such as serial servers and universal serial bus solutions. In addition to its product offerings, Digi provides various services, including professional services like site planning, implementation management, application development, and customer training. The company also offers data plan subscriptions and enhanced technical support services through its Digi Wireless Design Services. Furthermore, Digi's cloud-based service, Lighthouse, enables customers to manage connected device deployment and network devices securely. Digi's solutions cater to various industries, including food service, healthcare, transportation/logistics, and more. Its products and services are designed to provide secure and reliable connectivity for mission-critical applications. With a presence in the United States, Europe, the Middle East, Africa, and internationally, Digi International Inc. is well-positioned to meet the growing demand for IoT solutions. The list of businesses and services provided by Digi International Inc. includes cellular routers, cellular modules, console servers, radio frequency products, Digi XB brand, embedded system products, Digi Connect and Connect Core brands, infrastructure management products, serial servers, universal serial bus solutions, professional services, site planning, implementation management, application development, customer training, data plan subscriptions, enhanced technical support services, Digi Wireless Design Services, cloud-based service, Lighthouse, for managing connected device deployment and network devices, SmartSense by Digi for monitoring temperature, facilities, quality control, and incident management in various industries. The stock price of Digi International Inc. has increased by over 30.52% in the past year due to several significant news events. One major factor was the company's strong financial performance, particularly its impressive earnings for the fiscal fourth quarter of 2025, which exceeded analyst expectations and led to a 7% gain in the stock price. Another key driver of growth was Digi International's strategic acquisitions, including the purchase of Jolt Software for $145.5 million in cash, which is expected to be immediately accretive to adjusted earnings per share. The company also acquired Particle, a leading provider of edge-to-cloud application infrastructure, adding approximately $20 million in annualized recurring revenue, ARR, to its IoT products and services segment. New product developments have also contributed to the stock's rise. Digi International unveiled several new products and certifications, including the Digi XB3 BLU module with Bluetooth Low Energy 5.4 connectivity for industrial applications, and announced plans for Digi XB for Wi-Sun. The company's Z45 industrial controller received certification for use on T-Mobile's cellular network, expanding deployment options for industrial automation. The strong financial results of the fiscal third quarter of 2025, with earnings per share exceeding forecasted amounts, also contributed to the stock hitting a 52-week high of $37.07. Additionally, analyst price target increases, such as Piper Sandler's adjustment to $41 from $36, further boosted investor confidence in the company. Overall, these events demonstrate Digi International Inc.'s robust financial health, strategic expansion in the Internet of Things, IoT market, and increased investor confidence, leading to a substantial rise in its stock price. Digi International Inc. market capitalization of $2 billion is materially smaller than most of its industry peers of roughly $5 billion. Digi International Inc. trades at a higher price-to-earnings ratio of 43 times and a higher price-to-book ratio of 2.72 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company maintains a moderate leverage profile, with liabilities making up 31% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. On the growth side, product revenue increased by 12% to $9,067,000, while service revenue saw a significant jump of 31% to $9,529,000. The IoT segment also contributed to revenue growth, with IoT products and services increasing by 10.9% and IoT solutions rising by 38.7%. Geographically, North America experienced a notable 28% growth in revenue, while the rest of the world saw a 21% increase. Market expansion in industrial IoT products and services was another key driver of revenue growth, as well as an increase in recurring revenue from subscription and cloud monitoring services. On the other hand, revenue decline was primarily driven by disruptions in manufacturing relationships and supply chains, which led to delays or lost revenue due to late deliveries by vendors of components, force majeure events, and labor shortages. Fluctuations in currency exchange rates, tariffs, import restrictions, and other trade barriers also contributed to revenue decline. Additionally, changes in government regulations, geopolitical tensions, and unexpected changes in diplomatic and trade relationships had a negative impact on revenue. The net income of the company experienced a significant increase in 2024, rising by 16% or $1,628,000 compared to the previous year. However, this growth did not translate into an increase in net income per common share, which remained steady at $0.31 for both basic and diluted shares. In terms of profit margins, there were mixed results. The gross profit margin saw a slight decrease from 62.2% to 62.4%, while the operating profit margin improved significantly, increasing from 12.7% to 13.3%. Conversely, the net profit margin declined from 9.7% to 9.1%. Segment-wise performance also revealed some interesting trends. The IoT Solutions segment saw a substantial increase in operating income of 370 basis points, while the IoT Products and Services segment experienced a decline of 60 basis points. These variations suggest that certain areas within the company are performing better than others, contributing to the overall net income and profit margin changes. The company's financial performance indicates a positive trend in operating cash flow. In 2024, the company generated $35,626 in positive operating cash flow, demonstrating its ability to produce revenue that exceeds expenses. This is further supported by the net increase in cash and cash equivalents, which shows an improvement from a negative $1,575 in 2024 to a positive $9,030 in 2025. These figures suggest that the company is effectively managing its finances and generating sufficient cash to support its operations. Management is optimistic about the company's outlook and strategy. They expect to recognize revenue on approximately $99.8 million of remaining performance obligations over the next 12 months, with a range of 2 to 5 years for full recognition. This indicates a strong pipeline of future revenue. The management team is focused on driving growth in key metrics such as annualized recurring revenue, ARR, adjusted net income, adjusted EBITDA, and cash flow generation. They also expect operating margin rates to expand as recurring revenue from subscription and cloud monitoring services increases. This suggests a shift towards more profitable business models. In terms of specific goals, management aims to continue driving growth in key areas while maintaining positive cash flows from operations for the foreseeable future. With sufficient cash balances generated from operations and borrowing capacity under their credit facility, they are confident in their ability to fund business operations and capital expenditures for at least the next 12 months. Overall, management's outlook is one of steady growth and expansion, driven by increasing recurring revenue and operating efficiency. They see opportunities for future success, including potential acquisitions and supply chain normalization, which will further support their growth strategy. The company has made significant strides in its growth strategy through strategic acquisitions. Two notable acquisitions that have contributed to this expansion are Jolt and Particle. Completed in August 2025, the acquisition of Jolt marked a pivotal moment for the company, while the purchase of Particle in January 2026 further solidified its position in the market. These acquisitions demonstrate the company's commitment to strategic growth through targeted investments. The absence of any information on divestitures suggests that the company is focused on expanding its operations and capabilities rather than reducing its scope or footprint. There are concerns about inventory buildup and supply chain disruption that could impact the company's operations. Inventory buildup is a concern due to higher inventory-related expenses in certain segments, contributing to a decrease in operating income. The transfer of inventory to property, equipment, and improvements has also resulted in significant losses. Supply chain disruptions pose another risk, with potential impacts from various factors such as recession, product demand fluctuations, supplier financial solvency, and ongoing supply chain challenges. Disruptions in shipping routes due to geopolitical risks and sanctions on trade with Russia and Belarus are also a concern. Furthermore, the company's reliance on single-source suppliers and global supply chain stress adds to the risk of disruptions. The combination of these factors creates uncertainty for the company's ability to maintain its operations without interruption. Addressing these concerns will be crucial in mitigating potential losses and ensuring business continuity. That concludes the financial summary for Digi International Inc. Feel free to comment below, and I will be happy to answer them when possible.